Okay, good afternoon, you rat pickers out there. This is Dennis Hudson at OrangeQuant.com. It is Monday, April 16, 2018, and another spectacular set of rat picks that busted out today. Now, just a heads up, the subscription service is going to be available very soon. Within a couple days now, we're getting very close. And the reason you want a subscription is because we put out the picks to you by email in plenty of time for you to make the trade on the day that the signal occurs, not after the close or something. We put it out before the close. Everybody else, sometimes we will put out stuff that they can look at. They can try to trade it on the day after the signal. But as a subscriber, you will get this stuff in your mailbox in plenty of time to trade it. Now, before we get into today's spectacular scoreboard, we want to give you the usual warnings, which I hope you take seriously. I want to put on my Paul Kangas voice. Do any of you remember him from PBS? Man, he was great. He did the financial and economic bit on PBS. Wish I had a voice like his. Anyways, trading is risky. Don't ever risk more than you can afford to lose. Do your own due diligence. If you're going to lose sleep over a trade, don't make the trade. Always use stop losses. Put in your stops, because anything can happen out there. And on the subject of due diligence, with us, with the rat picks, you want to check the spread and you want to check the volume to make sure you're comfortable with the way that is. Our threshold does check, our screen does check for volume, but sometimes the scanner makes a mistake. We have a lower threshold of 10,000 shares. Most of them are well above that. Alright, now let's look at the scoreboard. And by the way, right after the scoreboard, we're going to talk about how to trade rat picks, what kind of strategy you want to use to make your rat picks. After we give you the rat picks, what you want to do and how to trade them, okay? And here's the scoreboard for today. That top row is what we put out yesterday, Sunday, April 15. You, as a subscriber, you would have had this before the close on Friday, and that's very important. The row below that is the last set of picks we put out, which would have been like last week, Wednesday or Thursday or whatever it was. And I've only got those up just because we're going to talk about trading strategy in a minute here. Okay, let's talk about what we did today. Look at this. ACRX, oh, by the way these are measured is that it's a presumption that you enter at the close on Friday, and then it's measured by the high of Monday, today. Okay, now, we all know that it's really hard to get in or out exactly at the high. That is, to get out at exact high. But with modest technical analysis skills and just a decent indicator or two, you can get very close to that high, usually. But we had to use some kind of metrics, so this is how it works. You got in at the close on Friday. This would be your potential maximum gain if you got out at the high on Monday. And actually, I did look at a couple of these on 10-minute charts today, Monday, and there just didn't seem to be any fake outs that I could find. That is, where they dive down and then they swoop back up, that kind of thing. Well, if you're running indicators on a 10-minute or a 5-minute chart, you can avoid that kind of problem. But, well, I shouldn't say you can avoid it. I mean, it will happen, but it doesn't seem to be happening here. I mean, the main winners here just seem to roll right up from open. They just kept rolling to the top. Okay, I got the marbles out of my mouth. I think I can talk straight now. Alright, so on ACRX we had a 8.9% potential gain, NEPT 8.6%, IVTY was kind of a stinker, 0.6%, IFON, iPhone plus 0.8%, Axum, Axum plus plus 16.7%. And the average on those was 8.7%. So another spectacular day with our RatPicks. A round of applause for the RatPicks, alright? Okay, let's move on. Now, let me ask you something very simple. As a subscriber, if you had been subscribing to this and you received these picks in your mailbox before the close Friday, what would you have done with them? How would you have decided which ones to trade? I'm going to pause for a little bit here. Not really pause the video, but I'm just going to kind of chat while you think about that a second. Okay, and I think that's long enough. You know what you do. And some of you would say, well, I would take these and I would look at them on my charts through the eyeballs of technical analysis and decide which ones would be the biggest payouts, and then I'd trade those 2 or 3. Now, some of you may have said you'll sit there and you'll go through these with your technical analysis skills and decide which ones to pick up. I may have already said that, but I got interrupted, so anyway. And there's nothing wrong with that, nothing wrong with technical analysis, except it does not mix with statistical analysis. And I would guess if you go back and look at the charts, you could not have made these calls. Maybe one of them, I don't know, maybe. But these picks are statistical. They're quant analysis. They're not technical analysis. So anybody who wants to sit there and pick and choose between them, I say, with all due respect, you're crazy. I mean certifiable, really crazy, because TA and statistical quant do not mix. They are oil and water. Now let's look at this again and think like a banker. By the way, I have stayed out of any of these trades so as not to be accused of being a pumper. I'm reevaluating that, and once I'm putting out the subscriptions, the way I feel, if I'm going to say here is something good, then I should have some skin in the game. I think people would want that. So probably I will be in the trades right along with you, and I'll let you know if I am or am not. Here's what I would do, and I'm not saying this is what you should do. You do your own DD. The money you make is what you make. What you lose is what you lose. I have no stake in that. But what I would do, I would buy all 5. That's right, and I can do that without any real harm to my balance, because I do these kinds of trades at Robinhood.com, so I don't pay any broker fees, not in or out, no broker fees. So I'd have bought all 5, and maybe you know, I could have got close to the high today on each one of them, and I'd have averaged 8.7% gain. That's an average. I'd have missed out on this great big Axum game at 16%, but I'm not the kind who'll swing for the fences, because that's going to land you in the poorhouse. So that's the strategy I'll be using, and for compounding purposes, this is a great strategy. And quickly, let's talk about that. You bring up a spreadsheet and look at it, not just 8.7% gain or 9.1% gain. You don't even have to go that high. If you were able to come up with an average of 5% gain, man, the compounding in your account would be tremendous. Sorry, my cell phone just went off again. It would be tremendous. Take a spreadsheet and run some numbers. That's how bankers make money. That's how hedge funds make money. Mutual fund managers, that's how money gets made, is with compounding. So even if you can't hit the high mark on each one of these, you still would come up with a pretty good average, I think. And I say I think because statistics do have losers. So we've been winning and winning and winning, but you never know, it can slip. So you have stop losses. Alright, just some ideas for you. I'm Dennis Hudson at orangequant.com. Hope you have a great evening, and keep watching us, because like I say, within a couple days the subscription service will be available. You don't have to sign up long term. You just take it for a month. You'll get 8 emails with the RatPicks in them each month. Okay, that's how that works. You'll get 8 sets of RatPicks every month. That's about twice a week. You can, unless you have a large margin, you can only trade about twice a week anyway, because of the T+2 settlement rule. So again, my plan will be to divide up my risk capital between all 5 picks, and then trade them, and I'll do the best I can with each of them, and then get out. No broker fees at Robinhood.com. I can do that way. I do maintain an account at TD Ameritrade. That's for specialized types of stock trades and option trades. I don't really need that kind of 850-pound gorilla of a trading platform to do this stuff. But it's nice to have, and I would urge you to open an account. I'm not affiliated with them. I don't get compensated by them or by Robinhood. But I'm just saying that's what these things are for. All right, good night to you. Visit us at orangequant.com, and we will have the subscription service available just very soon.